guys. You see time is around 9:30. Let's look into Bitcoin trade analysis on Thursday, Friday. So let's look on intraday bias, guys. So on a daily time frame, let's look from higher time frame to lower time frame. And what you can see here is that, let me explain to you from this day itself, guys. You can see clearly the market rejected price from 9 as well as the 21 moving average over here and closed above this 200 moving average in a daily time frame analysis, which I have already mentioned to you. And here the market swept previous 2 days liquidity over here. You can see this is the sell side liquidity where the market swept and closed within this range. And the next target would have been this above this and even this candle over here. Even before this candlestick formation, I have already explained to you this, guys. But you can see how the market seems to be very bullish and even swept this high and even swept this high. And next liquidity is over here. So even there is a high chance the market might continue bullish. So you can see this is our next target, guys, where the market would definitely head. And if you consider here of this bullish momentum, you can see clearly the market, if you consider the low to high of this candle, you can see the market didn't even retrace to 0.38 level, guys. So you can consider this to be a single swing itself. In case if the market would have retraced to 0.38 level, you could have considered it to be a pullback. You can see how bullish the market is, and the market is trading above the upper limits of this huge bullish impulsive candle. And you can see on this day, the market swept this high, the candle high over here, and closed within this range. So on next day of this day, guys, you could have targeted this low. Since the market swept that high, this day you could have targeted this low, guys. The market closed above these levels, and the market made high and continued all the way towards this low. Since the market swept the previous day's liquidity and closed within this range, so the next target would have been this. And on the next day, you can see the market even swept this previous day's low and closed within this range. So you could have targeted either this high over here, or you could have targeted it all the way to this side. And you can see on the next day, the market swept this high and even swept this previous high as well. You can see this liquidity over here also has been swept on that day. This is another buy side liquidity where the market swept this liquidity over here and closed within this range. So what you could have either done is to plot the high of this candle to the low of this candle over here. And we should see in case if the market sweeps above or below these levels. And you can see on the next day, the market formed a doji candle. And this was on Saturday. And usually on Saturday and Sunday, guys, there won't be such liquidity. And you can see this kind of doji candle. And on the Sunday, guys, you can see the market swept this previous Saturday's high and closed below these levels. And for the next day, you could have targeted this low over here. And you can see the market on Monday, guys, came all the way, swept this previous swing low over here, and even this low and closed within this range. And for the next target, you could have targeted it above these levels over here. But here you can see the market here formed an insider candle. And what happened after this insider candle is that the market swept this previous day's low over here and closed within this range. So what you could have looked for on Tuesday is to target this high over here. This is one buy side liquidity. This is one buy side liquidity where you could have targeted, and you could have targeted it all the way to this levels. I hope you're understanding, guys. The market already swept this swing low over here. So the market came all the way, failed to sweep below these levels. Instead, the market came, mitigated its demand zone over here, and even closed within this range, clearly signifying some sort of bullishness over here. And whenever the market rejected price from these lower levels and swept and closed within this range, you could have targeted this high, this high, this high, this high. And you can see the next day how the market impulsively broke very huge momentum on Tuesday, guys, where the market showed some kind of aggressive momentum. And if you see here, guys, you can see the market here mitigated its highs, but you have failed to mitigate above these levels. But what you can see is that you can see the market swept this high over here and closed within this range. So this is another buy side liquidity where the market swept this liquidity above and closed within this range. So what you could have looked for is this low on the next day. This is what you could have looked for on Friday, guys. And on Saturday, you can see on Thursday how the market impulsively broke here. And if you look into a 1 hour time frame analysis, so wait a second, guys, and you can see the market targeted this low, and the market made an high over here and closed within this range. And for the next day, you could have targeted it to this low here. You can see the market swept this low and closing within this range. In case if the market closes above this level, guys, above this line over here, mitigates this levels and closes above this level, there is high chance the market might continue bullish. And you can see of this impulsive momentum, guys, of the height of this candle, the market came and all the way to the mid of this levels of this impulsive candle, and you can either expect this kind of break a block level as well. So the market retesting this break a block levels, broke, retest, and continue further upside. So you could expect retest and continue. It all matters. What matters is that the market closing above this candle, guys. You can see above the previous candle's range is what is important. So in case the market closes above these levels, there is high chance the market might target all the way to these levels, and the next level would have been this level over here. So this is one buy side liquidity where you could expect. So I hope you're understanding, guys. So let's look into a 1 hour time frame and analyze how the market here behaved. So this is the previous day low where the market is sweeping here, and here is another low where the market swept. So let's look into a daily time frame. You can see clearly this was another swing low where the market swept, made an high over here, swept the previous day. You can see it's previous day huge bullish momentum, swept this liquidity and immediately came back to a range over here. There were multiple buy side liquidities over here where the market here broke it, which I have already marked it here. You can see multiple buy side liquidities. And what we need to focus here is at the bottom here, guys. You can see the market here mitigate, we swept this low over here and showed some kind of huge aggressive momentum towards the upside. You can see this kind of huge impulsive momentum, guys, where the market broke this structure over here as well. You can see this clear structure break over here. You can consider it to be a market structure shift. And this I'm explaining not in a 5 minute time frame, guys. This I'm explaining in a 1 minute time frame. So let's look into a 15 minutes time frame and see how the market aggressively broke structure towards the upside. And you can see how bullish the market is. Came and broke all the way to these levels. And this is what I'm explaining it on Monday, guys. So for just for time, for you to make a clear picture of what actually happened and explain to you how you could have taken positions over here. You can see, guys, the Monday, what happened is that the market came and swept this low and immediately showed some kind of aggressive momentum. And what happened is that in case if you could have considered this was the swing high over here. So this is the swing high. So if you look into a smaller time frame on Monday, smaller time frame on Monday, you can see this is the swing high over here. You can see the market swept the previous 2 days low and immediately came back to range over here. You can see, guys, aggressive momentum towards the downside and this kind of V-shaped recovery immediately after the market swept and liquidated below this lows, previous candles low, clearly signifying some sort of bullishness. And what you could have considered is that either you could have placed your anchor VWAP level here, and you can see this kind of support where this candle which broke impulsively, you could have taken long position, keeping your stop loss below this candle, or you could have placed your anchor VWAP level over here, and you can see this candle, guys, taking support from this previous low of this anchor support and breaking this anchor VWAP level towards the upside and 21 and 9 moving average towards the upside. So either you could have taken long position here, keeping your stop loss, long position here, keeping your stop loss below that candle itself. So like this and targeting it all the way towards the upside. You could have targeted the liquidity levels over here, and you can see that above this market structure shift, there was some sort of fair value gap. So you could have targeted it all the way towards that levels over here. So that's how you could have targeted this. So in case if you might have missed out on this momentum towards the upside, what you can see in a 1 hour time, let's look into a 15-minute time frame. You can see the market came, showed some kind of aggressive momentum. And what you need to remember here is that the market here broke structure towards the upside by leaving a order block level. As you can see, there is an order block level, and above this order block level, there is a fair value gap also here. You can see fair value gap as well as the order block level. So let's take this out, and you can see this is a 15-minute order block, 15-minute order block. So you can see how the market shows some kind of huge aggressive momentum, swept this buy side liquidity over here, and even another liquidity levels over here. You can see another sell side liquidity, guys. So another sell side liquidity over here mitigated this fair value gap over here and immediately came back to a range, guys. You can see this order block level. That's why this order block level was very important, guys, since the market swept the previous liquidities over here. So if you consider the order block level over here, so this is on Wednesday. So I'll be explaining you on Thursday as well as Friday trade analysis. That's why I had to go back and tell you what the bias is. And you can see the market came mitigated and immediately came show some kind of aggressive momentum. And you can see this kind of V-shaped recovery, guys. Whenever you find aggressive momentum towards the downside and immediately reversing back to the range, you should you should consider it to be a strong demand zone over here, guys. Even though there was a strong selling pressure, this selling pressure was not strong enough to break this level below, guys. You can see this level, and immediately buyers have entered the market and showing some kind of aggressive momentum. And whenever you find this kind of aggressive pullback, guys, this supply zone over here is not strong enough, and definitely the market would mitigate break these levels. And you can see how the market came mitigated this order block level and showed some kind of downward momentum, but here the market failed to make a lower low here. You can see here, instead the market broke structure towards the upside, and even the order block level also has been broken, and this is a clear 5 minute order block where the market here failed to make a lower low here, guys. Even though if once the market mitigated these levels, you could have taken short position over here, and you can see this kind of 200 moving average resistance where the market is failing to close above these levels, clearly indicating some sort of bearishness. So instead, you could have taken short position, keeping your stop loss just below these levels, and you could have targeted it towards the swing low all the way to these levels. But you can see there was some kind of aggressive momentum. The market failed to make a lower low. Instead, the market broke structure towards the upside, clearly showing some sort of demand, guys. And you can see this kind of aggressive momentum where the market here left out some fair value gap over here. And you can see the market came mitigated this fair value gap. And there is no point in market coming all the way to this fair value gap again and continue further bullish. And in case if you want any confluence, you definitely use anchor VWAP levels over here. You can see the market taking support over here. And this candle which broke here, this was the sell side liquidity over here, where the market there was a lot of inefficiency in market. So the market came liquidated and immediately came back to range over here. You can see the market immediately showed some kind of momentum towards the upside, clearly showing some sort of demand even at these levels also. And there is no point in market again coming over here. So what you can see is that the market clearly showed a very good aggressive momentum towards the upside, clearly indicating a break of structure. And you could have plotted the last down candle before it broke structure towards the upside. And this was the order block level, guys. And this was a clear 5 minute order block. 5 minute order block. And you can see after this, the market taking support from the anchor we have level over here, even though the market faced rejection over here, and targeting it all the way towards the upside. And for target levels, you could use the common point within this to the common point within this to the common point within this. So you could have targeted the 1.68 level over here, or you can see how the market showed some kind of upward momentum. You can see this momentum over here, 4.26 level. And in case if you want to target it towards the upside, you can see the market came all the way to this level. So let's not consider it and trade all the way towards the upside. But what we need to see is the risk to reward ratio. So what you could have taken is the long position over here, guys, keeping a long position over here, keeping your stop loss just below this candle. Or in case, guys, if you consider this impulsive momentum towards the downside, so you could have put the anchor way up level and you could have taken this momentum towards the upside. Or or what you could have done is to show this aggressive momentum towards the downside. Once if this levels has been broken towards the upside is where you could have taken position. But here you can see this candle over here broke the 9 as well as the 21 moving average and closed above these levels. So this candle showed some kind of confluence over here where the market showing very good demand. So this is how you could have taken. Instead of taking aggressive buy position over here, you could have waited for some sort of confirmation where the market of the previous swing broke the zero point 0.5 levels over here. You can see the zero point 0.5 levels has been broken towards the downside, and the market showing some kind of bullish momentum. And that's how you could have targeted it all the way to these levels over here, guys. So the common point between this to the common point between this to the common point between. So you could have targeted it all the way to 1.68 level or this buy side liquidity over here. So this was the buy side liquidity where you could have expected the market to come and reach over here. So long position at this position is keeping your stop loss just below that candle itself and targeting it all the way towards the upside. So this is how you could have taken a very good risk to reward ratio is with a proper confirmation 1:9, I guess. So if you consider it the buy side liquidity over here, this was 1:5 ratio. This was a pretty good trade, guys, where you could have taken. And if you consider this swing momentum over here, this aggressive momentum where the market here again broke structure towards the upside, another break of structure, guys. So if you consider this swing momentum towards the upside, the low of this candle to the high of this candle, and what you can see here is that the market over here showing some kind of optimum trade entry zone over here. You can see fair value gap over here. This is one fair value gap which is in overlap with this optimum trade entry zone, as you can see. This is the optimum trade entry, which is in overlap with the fair value gap over here, where the market came and immediately showed some kind of momentum towards the upside, where the market broke structure, clearly signifying bullishness. And what happened here is that the market again retraced back to this fair value gap here. Market failed to close below these levels. Instead, the market taking support from these levels and clearly breaking this high also. You can see the previous high also was being broken. So clear breakout structure. And after seeing this kind of neckline break, as you can see clearly, the market broke structure towards the upside. And you can see with this candle over here, rejecting price from the lower levels and clearly indicating bullishness, rejection of price from 200 moving average. This was another trade entry where you could have captured, keeping your stop loss just below that candle. And for target levels, you could have used this swing momentum over here. So if you consider the common point between this to the high of this candle to all the way to this low of this candle over here. So if you consider this swing momentum, so you could have targeted the 100% move over here. You can see exactly at this point the market came, or the buy side liquidities over here, or the 1.68 level over here. Or you can see, guys, if you look into a time frames, you can see exactly where the market came, the 3.6 level over here. You can see this is where you could have targeted it, guys. In case if you have that conviction to hold on to your trade, you could have just traded your position all the way to this levels over here. But for you to take long position here, guys, there is one confluence over here. You can see there was a huge bearish momentum, expecting that the market sentiment is clearly bearish over here. What you could have done is to plot the order block levels over here. So if you go into a 15 minutes time frame and you can plot the last up candle before it broke structure towards the downside. So this was the last up candle, guys. So you can see the market came and mitigated this order block levels and immediately showed some kind of aggressive momentum towards the downside. So if you consider this momentum over here, you can see, guys, the market formed an inducement levels over here. You can see there was some inducement level where the market retraced and reached all the way to this order block level. So this is a clear 15-minute order block. So what you could have expected is some sort of reaction over here. So what you can see, the market clearly formed a chalk over here, or you can consider this to be a market structure shift, clearly indicating some bearishness. So what you could have considered is the market retracing back, retracing and continuing further bearish. For this, you could have considered this fair value gap over here. You can see and the market would have mitigated this fair value gap and continued further bearish, guys. So let me plot it after the market broke and closed below this a clear chalk formation, or you can consider the market structure shift. The market would have mitigated this fair value gap and immediately could have shown some kind of aggressive momentum towards the downside and continued further bearish. So this is how you could have expected the market to behave. But instead, you can see there was a good PD area over here. The market even broke upside, guys, towards the upside, clearly indicating some sort of bullishness. You can see clearly the market broke towards the upside. Or what you could have considered is that in case of this aggressive momentum, if you consider the high to low of this candle, you could have either expected the market to come all the way to this optimum trade entry zone and reject price from the CS and continue further selling towards the downside. So you can see how the market here rejected price over here and continued further bearish momentum. In case if the market would have rejected price over here and could have broken towards the downside, the market could have easily broken this low over here, guys. But here you can see instead the market broke structure towards the upside, taking support from this PD array. Since the fair value gap over here, the market towards the upside and towards the downside, you can see this fair value gap imbalance over here. Again, market came and retested that imbalance and continued this kind of momentum, guys, where the market failed uh, to close below this level. Instead, the market broke structure towards the upside. I hope you're understanding, guys, what I'm saying. There were three possible scenarios for you to expect the market sentiment to be bearish, guys. So once the market reached all the way to this order block level, you can see the market here swept this previous swing high and rejected price from these levels and came all the way towards the downside and showed some kind of aggressive entry. And you could have considered this to be a high resistance liquidity run. So the market sweeping and immediately rejecting price and continuing further towards the downside. And if you consider the order block level here, the market came and immediately reject price and formed a market structure shift. And there wasn't much aggressive momentum towards the downside. But what you can consider is that the market broke this low by with only one fair value gap over here. And I'm explaining to you in a 5-minute time frame, guys. And you can see here with only one fair value gap over here. You can see this fair value gap over here. This only one fair value gap over here, and this was essentially a fair value gap, guys. And what happened here is that either there were possible scenarios is that the market breaking these levels, reject coming and mitigating this fair value gap and continuing further towards the downside. This was one possible scenario. Next possible scenario was that the market, after breaking these levels over here, breaking levels over here, could have retraced to 550 levels or the optimum trade entry, and clearly breaking structure towards the downside and continuing further, even breaking this low also. You see this low also being broken towards the downside. And but what happened here is that instead the market, guys, broke structure towards the downside, again came all the way to this optimum trade entry and came all the way to this fair value gaps over here and broke structure towards the upside. I hope you're understanding, guys, what I'm saying. And whenever the market here took support over here, the PD array support over here, where the market broke structure towards the downside with a fair value gap, again immediately reversed back towards the upside with a fair value gap, again retested this fair value gap and broke structure towards the upside, clearly changing the market sentiment here from being bearish to bullish, guys. When you have image plotted this in a 15 minutes time frame, the PD array over here where the market broke structure towards the upside, and either when you could have plotted these levels over here, the common point between this to the common point between this, you can see the market neither retraced to 0.38 levels over here. Instead, the market came all the way to this breaker block levels over here. So, or you can consider this whole momentum as a single swing since that market didn't retrace over here. So if you consider the low of this candle to the high of this candle, even the market here also didn't retrace to. But what you can consider is this levels over here. So you can consider the order block level over here. This was a clear order block line over here. And this was where the market clearly broke structure and immediately reversed back, retested this order block level and continued. And you can see, guys, here anywhere along this position where you could have taken long position over here, you can see anchor gap level. When the market clearly broke the structure itself, you could have taken long position. And looking at this support from 9 as well as 21 moving average, where price is trading above these levels, as soon as the market broke the neckline over here, again retested the neckline over here. And this is where you could have taken position over here, escaping your stop loss just below the swing over here and targeting it all the way towards the upside. So for target levels, what you could have used is this swing momentum over here, is where the market came here, retested over here. So I could consider this swing momentum, which changed the market sentiment from being bullish to bearish. So this was one trade setup where you could have taken, or what you could have targeted is just hold it onto your position and look at this, guys, how the market aggressively showed some kind of bearish sentiment where the market is trying and trading all the way above. And what I need to mention to you here is that if you look into a higher time frame over here, so there is a buy side liquidity over here. Let me mark it in level 3. Not this buy side liquidity, guys. So what you can see, this high, the previous swings also has been broken towards the upside. You can see is the market retested, which I've already shown. These previous swings have been retested. So if you consider this momentum over here, this was one buy side liquidity. And if you mark it out heavily, what you can see here is that the market over here is, I hope you're understanding. The market took support here, broke these levels aggressively. But what market left over here is this fair value gap over here. You can see this fair value gap where the market has not yet mitigated its fair value gap. And this momentum towards the upside was not very strong. As you can see, this kind of market just swept this buy side liquidity inside this and rejected and continued all the way towards the downside. Again, took this support over here. You can see the fair value gap as well as the breaker block level. As you can see, if you consider this candle over here, and if you try to plot these levels over here, guys, you can see the market retesting that levels towards the downside. So if you look into a daily time frame analysis, and let me plot it once more. So this candle over here. So let's look into a 5 minute time frame. So you can see, guys, how the market exactly came all the way, retested these levels over here and continued further bullish. I hope you're understanding, guys. Either when seeing this kind of fair value gap over here, and what you could have considered is this momentum towards the downside. So this levels over here, the high to the common point in this, and what you could have plotted is the 0.5 levels over here. Or you can consider this order block level, or you can consider the 0.5 levels over here is the 0.5 level where the market came and retested this fair value gap. Either you could have taken another long position here, keeping your stop loss just below this candle itself, or you could have taken position over here, keeping your stop loss below this previous swing over here. and you could have targeted this swing over here. Is the common point between this to the common point between this. So if you consider this swing momentum over here, so you could have targeted it all the way to 1.68 level over here. You can see this is the 1.68 level where you could have easily targeted over here. So this is one trade momentum where you could have easily captured. And for this target levels, guys, so definitely there was no proper retracement over here. What you could have either considered is that, let me be, this is how usually I consider is the retracement levels of these levels. And once if this 4.2 levels also has been broken, what I would consider is the 0.35 to 2.6. Again, I would have plotted the retracement level and hope you see exactly at these levels. And again, the market is trading above these levels. Again, with this swing momentum, this is another retracement I would have plotted. And you can see the market again came all the way. And another retracement over here. You can see exactly this lines over the 3.6 level. I hope you're understanding, guys. This is how usually I usually trade, guys. So either if you might have not considered this momentum, but definitely this is where I would have definitely exited my position. You can see this once the market swept this liquidity and seeing this kind of demand over here was not strong enough, was not breaking aggressively. So this is where I would have either exited my position above this liquidity zones over here. This is how I would have traded it, guys. And you can see on the on again the market came retested and broke these levels. But here you can see this swing over here, guys, where the market here failed to make an higher high. Instead, the market broke structure towards the downside. You can see clear change in market sentiment here. So you can consider this to be a chalk formation. And if you consider this momentum towards the downside, where the market came and you can see if you consider the internal structure here, the market came and mitigated this fair value gap. So if you consider this momentum, guys, there was a fair value gap above these levels. But instead, if you consider the common point between this to the common point between this, the market retraced to 0.38 level, made a swing low here. So what you can consider is this swing momentum, the high of this candle to the low of this candle. You can see the market retesting all the, you could have expected the market to come and mitigate this fair value gap price over here. But the market neither made this momentum and just market was trading in a sideways manner. As you can see, there wasn't much momentum after this. Here, and if you consider the zero point 0.5 levels, you can see the market again retested over here and broke structure towards the upside. And you can see this kind of failure swings over here. All these failure swings was being swept out by this momentum towards the upside. This was this day's low, so it's not considered that momentum. And you can see with this momentum, all these failure swings, guys, where the market was moving in a sideways manner, clearly broke structure. You can see a clear break of structure here, a clear market structure shift, showing some kind of demand over here. You can see. So what happened is that again the market came all the way to this demand level. So here you can see 0.38 level. Market came, or you can consider the market might mitigate these levels over here. The fair value gap levels over here, rejected price 0.38 level. So you could have expected the market to reach. There was a quick scalp where you could have taken this. You can see the market retracing to 0.38 levels over here. You consider the common point in this to the common point within this, where the market came and here the market swept this equal lows liquidity over here. You can see this was a sell side liquidity and mitigated this fair value gap. The fair value gap over here, you can see. So this fair value gap and immediately broke structure towards the upside. You can see a clear break of structure here, showing some sort of demand. So on this retracement is where you could have taken long position, or you could have taken this order block level over here. When price retest these levels, and you could have targeted this momentum towards the upside. So long position here, keeping all the way towards these levels. But risk to reward ratio you could have expected towards the upside. What happened is that the market again rejected price from these levels and came back all the way to this demand zone over here. You can see the market over here. So let's not consider this momentum, guys. So what we need to see here is that there was a clear demand over here where price rejected from 200 moving average and the fair value gap over here. You can see this fair value gap is where price came and mitigated this fair value gap. can see the market failed to close below these levels and showed some kind of momentum towards the upside, where the market clearly broke the structure high as well, clearly indicating a breakout structure. So if you consider this whole swing momentum towards the upside, and if you mark the low to the component in this, to the component in this, you can see there was another breakout structure here with fair value gaps. So here you can see this was another fair value gap where the market mitigated. So either you could have taken long position of this 200 moving average fair value gap over here, keeping your stop loss just below this order block level. And for target levels, what you could have either considered is this swing momentum, is the component in this, to the component in this, to the component in this. So you could have targeted it. You can see exactly where the price came, the 2.6 level over here. This is how you could have targeted it, guys. So exactly towards the 2.6 level. This was one trade opportunity where you could have taken, where the market came all the way to this levels, failed to close above this level, and clearly showed some kind of aggressive momentum. You can see how the market is consolidating, mitigating all these fair value gaps over here. You can see even after mitigating this fair value gap over here, the market here failed to make an higher high. Either when you could have considered this swing momentum nowadays, you could have taken long position in case if you see this kind of support over here, keeping your stop loss just below this candle. You can see you could have expected the market to broke towards the upside, but what happened is that immediately the market reversed towards the downside. And with this kind of reversal, you could have exited with a small stop loss, because I have told you, whenever you find retracement and the market breaking the zero point 0.5 levels of this towards the upside, you could have considered the market to break structure, even this swing high above, but instead the market immediately reversed. During this kind of momentum, you should accept these losses and take short position, guys, immediately when you uh, find this momentum. Where here you can see the market clearly broke structure towards the downside, a clear chop formation. And if you consider the high of this candle to all the way towards the low of this candle over here, compounded in this, you can see the market rejecting price from 0.38 level over here, the 0.38 level. Or what you can see is that if you consider the order block level over here, and this was the small swing over here. So the high of this candle to the low of this candle, you can see the market reaching all the way to this fair value gaps over here. And you can see if you consider the component in this to the component in this, the market broke, retested over here and continued further bearish, guys. I hope you're understanding. Where the market clearly broke structure towards the downside, you can see a clear break of structure. And if you consider this swing momentum, the high of this candle, the market came all the way to this 450 levels and the 200 moving average rejection over here. So a short position here, keeping your stop loss just below above this candle over here. And for target levels, you could have continued like the component in this to the common point between this to the compound between this. So, so the 1.68 level is where you could have targeted over here. You can see the anchor we have level over here, the support over here, where it's acting as some kind of both acting as confluence over here. This is where exactly you could have targeted it, guys. So this was on Saturday. So I'd be explaining it on Saturday trade analysis on tomorrow. But let's consider this, guys. So this is how you could have taken, since there was some kind of liquidities above the failure swings over here. So you could have either expected. So this was a demand over here. Either you could have expected the market to take support over here and break here, but you can see clearly the market broke structure towards the downside and mitigated these fair value gaps. There is a lot to explain to you guys. So definitely, not just with this one confluence you can take positions. There are a lot of confluences where you can take positions, guys. So if you look into higher time frame analysis, what you need to see here, you can see the previous swing low over here. This is the previous low, guys, over here, where the market swept this low and immediately came back to range. But here the market failed to make a higher, instead broke structure towards the downside over here. You can see after, even though after sweeping this low, clearly you can see a market clearly broke structure with kind of huge momentum. And if you consider the component in this to the component in this, the market retraced to 450 levels. So either out seeing this kind of 200 moving average resistance also at 450 levels. This is the 450 levels. So Seeing this kind of 200 moving average, you could have taken a short position over here, keeping your stop loss just above this 200 moving average and targeting it all the way to this demand zone over here. Or to consider this common point in this to the common point in this. Or any swing lows is where you could have considered guys. So I hope you're understanding our entry is important, guys, not our exit. Exit, you can just trial your stop losses. Either you can, if the market is moving in your direction, you can just trial your stop losses, or in case if the market is not moving, guys, you can exit with your predefined stop loss. That's how usually one trades. So I hope you're getting, guys. In case if you find my videos helpful, like, share, and comment. This is the price action how I usually trade, guys. So in case of I take everything this off, what we can see in a 1 hour time frame is that let's look into a 15-minute time frame. So what we can see here is that this demand over here, what you can see clearly the market broke this structure. So what you can consider is this demand over here. So you can see the market came, swept this low all the way to this level. So if you see this demand also has been broken towards the downside. This is the sell side liquidity where the market came, swept this low and coming back to range. So if you look into a higher time frame, this is the sell side liquidity. But what you can see here is that there is no fair value gaps over here. The market here there is some fair value gaps, but let's not consider. What you can consider is that the market sweeping this low, the sell side liquidity, and immediately came back to range and breaking this high. This high also you can see how aggressive the momentum towards the upside is there. Clearly, the market showing some sort of market structure shift over here. So again, the market came all the way to this order block levels over here. This is a clear 15 minutes order block where the market came all the way to this levels over here. So what you can either consider is that if you plot the high to low of this candle, once if this 0.5 levels has been broken towards the upside and again retesting these levels, that's how you could have taken, that's how you need to take your long position is break, retest and continue further bullish. That's my bias. Or if you look into a daily time frame analysis as of now, what you can see is that you can see this sell side liquidity the market has taken over here, rejected price from these levels and closed below these levels. And I have told you guys, once if the market closes above these levels, that's where you can take long position. In case if the market guys closes above this sell side liquidity, definitely you can target it above this level so high, the high over here and even high of these levels. So better take long position over here, keeping your stop loss just below this candle and targeting it all the way towards the upside, guys. So in case, I hope you're understanding, guys. In case if you find my videos helpful, please like, share and comment. Share with your friends and family as well and keep supporting my channel, guys. Thank you.